Hello my dear students. Today I am going to start new chapter of accountancy, that is rectification of errors. This is chapter number 19 in your books. So what do you mean by rectification of errors? As we all know that accounts are prepared by human beings and human beings may commit mistakes in passing a journal entry or posting in ledger or trial balance itself. So we have to rectify those errors by passing an entry. This is known as rectifying entry. So what are the errors which we commit by an accountant while preparing accounts? Some errors are those which do not affect the trial balance and some errors are those which affect the trial balance. So, errors which affect the trial balance are wrong casting, posting to the wrong side, posting of wrong amount, omission of posting one side of an entry, errors of totaling and balancing of accounts. Now, errors which do not affect trial balance. Error of omission, error of commission, compensating error and error of principal. Now, we shall discuss these errors one by one. First of all, we are going to discuss errors which do not affect the trial balance. Means the total of the trial balance matched, but there are some errors in the trial balance. So, first error is error of omission. Error of omission. Omission means to omit some entry or to forget to do some entry in the books of accounts. If the entry is unrecorded in the books of accounts, then this error is known as error of omission. Means entry which is to be recorded but not recorded in the books, that is known as error of omission. Means to omit some entry. Example: credit sales to Mohan for rupees 5,000 were not recorded. Entry will be Mohan debit to sales account 5,000, but we left it unrecorded. So we record it now with the entry Mohan debit to sales account. This is the rectified entry which we have to do. Clear? Error of omission. Next is error of commission. Error of commission means if a wrong amount is entered either in the journal or in the subsidiary books, the trial balance will tally because the same amount will be posted in both the accounts affected by the transaction. Suppose, I am writing the meaning first. If wrong amount is entered on both the sides of an entry, then this is known as error of commission. For example, sale then this error is known as error of commission. Next, compensating error. Compensating error, as its name suggests, that compensating error means one will compensate the another. If one debit is wrong and other credit is wrong, then both the debit and credit compensate each other. This is known as compensating errors. I am writing the meaning. If the effect of one error is neutralized by another error, then it is known as compensating errors. For example, if we have to debit rupees 50 in the books of Mohan and we have credited it by mistake, on the other hand, if we have to credit rupees 50 in the books of Sohan and we have debited, then both the transaction will neutralize each other and its effect is nil. Then that error is known as compensating error. Next, error of principle. Error of principle says that accounting principle is not followed in the books or entry. Suppose capital expenditure is taken as revenue expenditure, or the vice versa, revenue expenditure is taken as capital expenditure. Suppose paid wages for the construction of building. Paid wages for the construction of building means entry will be building debit to cash. But what we have done? Wages debit to cash. So effect is something is debited, but the name is wrong. Means capital expenditure is taken as revenue expenditure as its effect is nil, but it is wrong. So we have to pass rectified entry, building account debit to wages account. So this is all about errors which do not affect the trial balance. I am again repeating: error of omission, error of commission, compensating error and error of principle. Omission says when we have omit any entry or unrecorded any entry, then that is known as error of omission. Commission if the wrong amount is posted on both the side of entry. Compensating error if one entry nullify the effect of another entry. And error of principle when accounting principle is not followed in the entry and capital expenditure is taken as revenue expenditure, or revenue expenditure is taken as capital expenditure, then that entry will not affect the trial balance, but it is wrong. So we have to pass rectified entries in all the cases. So I hope you like this video and the concept is clear to you. Thank you.